Let me ask first how important it is to you, it was to you to see the shares rise on the first day of trading. How key is that for a company going public?
Well, it's a very important milestone for our company. Our company started in 1827, so we are part of the so-called oil industry. But this company has grown over almost 2 centuries in a very profitable and durable manner. And this IPO today is a new step in a new chapter in the history of the company.
Good morning to you, Michel. So a new chapter, does it come at a time, though, when you're nervous about trade tensions? Because, of course, we saw the US putting tariffs on EU exports, including wine and spirits. Is that going to be something that makes it difficult for you to forecast the future?
Well, it could have a small impact on our customers that are exporting to the US. But I think at the end, our customers are very smart in understanding that if the US consumers wants to drink a good champagne or a good cognac, it has to come from France. So therefore, either there is some elasticity on price, and the customers are not going to abandon their market in the US, and they will adjust their price accordingly to take into account this new tariff, or there is no elasticity on price, and the consumer in the US, unfortunately for him, will pay a higher price for the very good Grand Cru from Bordeaux, or the champagne or the cognac from France.
You do make, of course, you make Dom Perignon bottles, you make Hennessy bottles as well, but you're on the lookout for acquisitions. Are you looking to branch out into a different bottle market or a different glass packaging market completely?
No, I mean, our company is really focusing on the glass market. We produce and sell about 16 billion jars and bottles every year in glass, and this is our core market. We're not going to diversify beyond these products. However, we are present right now in 11 different countries from an industrial point of view with 32 factories, and our ambition is to expand our growth beyond the organic growth that has been quite good the last few years. We grew in the last 3 years on average 5.3%. We want to accelerate this external growth by maybe looking at acquisitions, either in the geographies where we are present or in new geographies.
I know that the owners of your business, majority owners, tried to sell this stake back in 2011, Michel, and then the IPO had to be pulled because of tensions to do with the Greek crisis. This time around, there must have been a lot of nervousness around the IPO market. Recent IPOs, in some cases, have not gone so well. What made this the right time?
Well, to be frank with you, it was a kind of a difficult time because the markets in the last few days have been quite turbulent, and the declaration about the tariffs on the wine exports also was not a good sign for our industry in general. Although we have 10,000 customers overall, and we sell, of course, other products and not just in Europe. But I think it just shows the size and the performance of the company has been recognized by the investors. They like the resilient profile of the company. They like the growth plans that we have. They like the improvement of profitability that we've shown in the last few years and will continue to have in the coming years. And all that has given was very well welcomed by our new investors and as a good investment opportunity for them.
How hard did you have to think about this timing for the IPO, Michel, considering the problems that we've had with big sort of unicorn IPOs over the past weeks and months? Was it a difficult decision to make?
Well, you know, we know from when we start such a project, which started about 6 months ago, we defined a targeted date, and you know that until the last minute you are subject to financial markets evolutions. But I repeat, the very strong appetite from the investors we've seen for this company shares has been so strong that we didn't even think about changing or postpone the date of the IPO.